Welcome back to Explain the Charts, everyone. Today, September 18th, 2025, we're zeroing in on QQQ, the Nasdaq 100 ETF, to provide you with a comprehensive and in-depth analysis of its recent performance and future prospects. Let's begin our journey by looking at the broader daily picture, giving us an overarching view of QQQ's trajectory over the past year and a half. The financial headlines are dominated by significant developments, particularly from the Federal Reserve, and it's crucial to understand how these impact the charts. Just yesterday, the Fed delivered a widely anticipated 25 basis point interest rate cut, the first of 2025, a move that typically signals an expansionary monetary policy. Furthermore, Chairman Powell's remarks hinted at the possibility of 2 more rate cuts in the near future, intensifying expectations for continued monetary easing. Historically, such dovish stances are highly bullish for growth-oriented sectors and thus for the Nasdaq, with futures already showing positive momentum today. However, the market's reaction has been somewhat nuanced. Yesterday, the broader U.S. stock market exhibited mixed performance, and surprisingly, the Nasdaq Composite, represented by QQQ, closed down over 0.5%. This dip was primarily attributed to weakness in several major technology names, notably Nvidia, which experienced a sell-off despite the rate cut news, indicating a complex interplay of forces at play. Now, let's dive deeper into the daily chart and pinpoint the most impactful movements. From May 2024, QQQ has been in a very clear and robust uptrend, consistently marking higher highs and higher lows, reflecting a persistent accumulation phase. A particularly critical event unfolded in early April 2025, when we witnessed a sharp and sudden correction. Price dramatically plummeted from approximately $476 down to an alarming low of around $402. This flash crash was accompanied by an extraordinary surge in trading volume, indicating widespread panic and aggressive selling. This 402 level, however, proved to be a pivotal reversal point, demonstrating immense buying power at distressed levels. The subsequent recovery from this significant trough has been nothing short of spectacular, propelling QQQ back towards record highs. This resilience strongly underscores a prevailing bullish sentiment and robust demand for technology stocks, particularly as the monetary environment becomes more favorable. Shifting our attention to the more recent daily candles, specifically from May 2025 through yesterday, we observe a consistently strong and well-defined uptrend. This sustained upward trajectory has propelled QQQ to near its all-time highs, reflecting enduring investor confidence in the tech sector. The psychological and technical support zone established during the April 2025 reversal, roughly between $402 and $420, now represents an extremely formidable long-term support level, making a retest highly improbable under current conditions. More pertinent for medium-term analysis is the price range of $560 to $565, which has historically functioned as both a strong resistance and subsequently a reliable support in the months of July and August 2025. This area will be crucial to monitor for any significant pullbacks. Currently, the primary resistance level is the recent peak, specifically the high of 592.86 achieved on September 16th, serving as a critical overhead barrier that QQQ needs to overcome for further upside. Let's transition to the 1-hour chart to gain a more granular view of the recent intraday volatility and how it relates to market events. An excellent example of this is the pronounced dip observed on September 5th, where QQQ experienced a sharp decline from approximately $580 to $572 within a short span of hours. Such abrupt moves are often triggered by unexpected news or shifts in trader sentiment, highlighting the swiftness with which prices can react. Despite the sharp sell-off, the price quickly found robust support around the 572 level and initiated a recovery, demonstrating the underlying strength and the willingness of buyers to step in. This pattern of significant dips being quickly bought back signals a resilient market, with strong demand absorbing selling pressure, a key indicator for continued upward momentum. It also shows that the broader positive outlook for tech can often overshadow short-term concerns, leading to rapid bounce-backs. Now, for the most immediate and crucial insights, let's examine the 15-minute chart, specifically focusing on yesterday's trading activity, September 17th. Although the overall daily candle for September 17th showed a marginal decline from its open to close, this shorter time frame reveals a more complex and ultimately bullish intraday narrative. Earlier in the day, QQQ consolidated around the $591 mark, indicating a period of indecision or mild profit-taking. However, a more pronounced dip occurred in the late afternoon, pushing the price down to an intraday low of approximately $584.365. This decline directly correlates with the news reports of Nasdaq's mixed performance and weakness in specific tech stocks, aligning perfectly with the reported sell-off in names like Nvidia. But the standout feature of yesterday's trading was the remarkable and swift rebound that unfolded towards the very end of the session. Price aggressively rallied, closing the final 15-minute candle at $592.59. This impressive late-day surge indicates that the initial selling pressure was not sustained and was ultimately overwhelmed by renewed buying interest. This strong close, higher than the day's open, suggests powerful bullish momentum building into today's market opening, perfectly aligning with reports of Nasdaq futures jumping this morning. Let's outline the bullish and bearish cases for QQQ in the short term, looking at what these charts and news tell us. On the bullish side, the Federal Reserve's commitment to rate cuts provides a strong tailwind, significantly lowering borrowing costs and enhancing future earnings potential for growth companies. Furthermore, the decisive late-day recovery seen yesterday from a notable intraday dip demonstrates robust buying interest and market resilience. The price level around 588.00 has recently acted as a reliable intraday support zone during episodes of volatility, suggesting it could continue to cushion minor pullbacks. However, there are also factors suggesting caution. The market is currently at or near all-time highs, making it susceptible to profit-taking, especially after such a strong run. Weakness in key Nasdaq components, like the reported sell-off in Nvidia, could trigger broader declines in the index. Additionally, geopolitical factors, such as the persistent global economic impact of Trump's tariffs, introduce an element of uncertainty that could weigh on investor sentiment. Immediate overhead resistance is clearly defined by the previous high of 592.86 from September 16th. A decisive break above 593 would signal strong continuation of the rally. Conversely, a sustained break below the 588 level could indicate further short-term weakness, potentially leading to a retest of the 584 support seen yesterday. Turning our gaze to the long-term perspective, the fundamental outlook for QQQ remains predominantly bullish. The relentless pace of technological innovation, which drives the underlying companies in the Nasdaq 100, combined with a supportive lower interest rate environment, forms a powerful duo. These factors are expected to continue bolstering growth stock valuations over time. Provided that the crucial medium-term support zone of $560 to $565 holds firm, any significant market corrections should ideally be viewed as strategic buying opportunities for long-term investors aiming to accumulate positions. However, prudent long-term investing also requires a vigilant eye on broader macroeconomic developments, including any unforeseen shifts in Federal Reserve policy, which could alter the rate cut trajectory, or escalating geopolitical tensions, which could disrupt global supply chains and economic stability. To summarize, let's recap the essential price levels and predictions for QQQ. The immediate resistance to overcome is the $593 mark. A strong breach here could open the path for further significant gains, perhaps towards the psychological $600 level. This move above 593 has a high likelihood of 70% in the coming weeks, especially if supported by continued positive market sentiment from the Fed's dovish stance and robust tech sector earnings. On the downside, key immediate support levels are $588, followed by $584 if that fails. A dip to the 584 level has a moderate likelihood, perhaps 60%, due to short-term volatility and profit-taking. A more substantial, medium-term support zone sits firmly between $560 and $565, which is likely to hold, with an 80% probability, should a deeper correction materialize, given the strong underlying trend. However, if global economic indicators or tech earnings broadly disappoint, a retest of this 560 to 565 zone becomes a real possibility, with a likelihood of 40 to 50%, particularly if the $584 level is decisively broken. When making trading decisions, always pay close attention to trading volume. Higher volume accompanying breakouts or breakdowns provides stronger confirmation of the move's validity. Furthermore, stay informed on specific news affecting major Nasdaq constituents, as their individual performance can disproportionately influence QQQ's direction. Thank you for joining Explain the Charts for this in-depth analysis. Remember to conduct your own research and manage your risk responsibly.